This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute for Friday, August the 9th, 2019. And once again, we've got a lot to talk about. There's a lot of influences on the futures part of your price and the basis part of your price this week. Really, the theme for the week in Chicago on the futures side of the equation, we came into the week with the managed money speculator holding a long position in corn and wheat and a short position in soybeans. And the theme for the week was short covering, buying back bean futures contracts ahead of Monday's crop production report and acre report, and adding to their long position in beans and corn. If you look at how the futures closed out for the week, December corn was up 7 cents to close at $4.17. November soybeans, your new crop contract, was up 21 cents a bushel this week to close at $8.91. And then your nearby wheat futures contract, Chicago wheat, the September contract was up 9 cents for the week to close at $4.99. So it's so positive and encouraging to see green across the board in those three commodities ahead of this report. If we look at something interesting, yesterday and today, soy oil was rallying significantly, and that definitely helped soybean futures prices. Remember, keep your eye on soybean oil and soybean meal futures contracts, because often it's a back and forth game, who follows who. Do beans follow meal, or does meal follow beans? So keep your eye on that and watch for that rally next week. We did see cotton hit a 3-year low this week at the same time that gold hit a 6-year high. Equities had severe losses coming into the week. We got word over the weekend that China had devalued its currency, and I know that's a complicated subject for very educated economists to talk about how a government can devalue their currency, but it looked like that happened over the weekend, and it sent equity or stock markets around the world into a tailspin early in the week. But here at the close on Friday, especially S&P and the Dow did recover much of their losses. When you look at that China currency deal, the yuan, it did fall to a 10-year low, and evidently there are many who think that was on purpose and in response to the tariffs that the president announced last week on consumer goods that would go into effect on Chinese goods on September the 1st. There was also lots of talk this week about how much revenue is actually coming in from the tariffs. You can find a lot of articles about this on social media and on news websites. $63 billion in tariffs is a number that was printed a lot this week that says the U.S. has taken in that much from Chinese imported goods in the last 12 months. The President Trump has also mentioned many times that the second round of the market facilitation program will not include any taxpayer money, that program is going to be funded by these tariff payments. So look into that a little bit. And we did hear, again, confirmation this week that China's Ag Ministry is confirming that they are suspending purchases of U.S. ag products. And we also heard multiple times this week the president tweeted a lot directly about farmers, and he's vowed to protect farmers. And he's also said that we're still talking with China, but that he's not ready to do a deal. When we slide over to some USDA numbers this week, crop progress, corn is rated at 57% good to excellent. Soybeans are rated at 54% good to excellent. And again, that's way behind the 5-year average. But remember, starting really this week and into next week, we're not going to be looking as much at crop progress, at crop condition as we are at crop progress. How much of the corn is silked? How many, what percentage of the beans are flowering? So keep that in your mind as you look for Monday's 4 o'clock crop progress report, to look at that overall progress of the crop, maybe even more than the condition of it. We did see a number this week. Spring wheat is rated 73% good to excellent, and the USDA has the winter wheat harvest as 82% complete. On the inspection side, what got loaded on vessels this week? Beans, corn, and wheat all came in right on trade expectations. On the sales side this week, beans and wheat came in as expected. Corn came in way below some pretty limited expectations, and it's a clear reminder that if you look at the 4 countries, the 4 largest corn exporters, our corn is the most expensive, and it's definitely hurting us on the export side right now. Now next week, right, it's all about Monday at noon. We get the August crop production report. There'll be a lot of volatility on futures price around that, and also we get the resurvey number from USDA on planted acres. Really think long and hard over the weekend about sales decisions, whether it's old crop that you need to clean up or making some more small incremental percentage sales on your new crop production. Think about that Monday morning. We'll have time before the report comes out at noon. Remember, if you haven't contacted your FSA office to do so, the market facilitation program sign up is underway. You can do that online, or you can do it at your local FSA office. And remember, if you do sign up for the market facilitation program online, remember you still have to call your FSA office and tell them you filled it out online. Keep your eye on the weather. Give us a call. As always, if we can help you. This is Robert Harper at Virginia Farm Bureau's Grain Division.